All right, if you are interested in venture capital or you work in the industry and you are not following the Praying for Exits Instagram account, you are missing out, my friend. So I thought that I would do like some of these breakdowns of memes, and I wanted to share one of my favorite Instagram meme accounts for venture capital, which is Praying for Exits. You can find them on Instagram. And I want to share this meme, which I just think is so funny right now, and share like why it's funny. So the meme is like, never judge someone without knowing their whole story. And it's got this guy and he's pulling a bunch of rocks. And then like, it's like trying to understand like what those rocks are. And as I was reading through this, I was like, this is hilarious, but probably most people don't understand quite what's going on. So the guy is like wearing a Stanford hat, and the idea behind that is that most venture capitalists in Silicon Valley went to Stanford. It's, like kind of like the Stanford mafia, if you will. And the idea here is that this is a venture investor, and he's got the challenge of all of these bad investments that he made back in 2020. Because if you think about 2020, yeah, if you weren't in the venture space, you probably saw like the huge run-ups in Bitcoin and Ethereum and like all of the hype and like, the Bored Ape Yacht Club and all the stuff that was happening there and so forth. And so, but it was like what you saw in like kind of like the general public discourse was like also happening on the venture side. Like Andreessen Horowitz set up multiple like billion-dollar funds to invest in crypto. Everybody thought like this is crypto's moment. It's going to be huge. And so like valuations were hitting all-time highs in 2020, 2021. Our firm even made a crypto investment, even though we typically don't do like crypto investments. We were like, oh, we're going to invest in like picks and shovels for the crypto industry and this really cool company called Prime Trust. And then, all of that kind of hit a wall in kind of mid 2022. And, Bitcoin's back up a little bit, but hasn't fully recovered. And so if you're a VC, right, if you think about like deploying capital, you raise a bunch of money, you invest it over like 2 to 5 years, right? Most venture funds invest in a 3-year time period. So if you raise a bunch of money in roughly 2019, 2020, and you deployed it all in like crypto investments in that period at their peaks, and then you come like fast forward to today, you're getting close to needing to go out and raise another fund. But if all of your investments are sitting in companies that were massively overvalued that are all really struggling right now because they're in crypto, right? Over the last 3 years, you're going to have a really hard time going back out to LPs and convincing them to invest in your next fund. And so like that's rock number one that he's pulling is like, I've got all these underperforming investments in crypto and that's making it really hard. The next one is 0.001 DPI. And you have to understand a little bit about like fund performance and how funds are measured. And if you want to do that, I've got videos that you should check out on how venture capitalists are evaluated by their investors, by their limited partners, as they were. But one of those metrics is called DPI, and it stands for distributions paid in, which is kind of this like nebulous term. I don't really love it. But what it means is for every dollar that I've given the venture capitalist, how many dollars have they given me back? And in the early days of a venture fund, like maybe you have some early wins. And so you're able to return, like 0.1, 0.2% DPI, or not percent, just 0.1, 0.2 DPI, which means for every dollar you paid in as an investor, you've gotten 10 to 20 cents back. Now, ultimately, over the full life of the fund, your DPI should be, depending on your strategy, risk profile, et cetera, should be somewhere between 2 to like 5x for top performing funds. The very best funds return like 8, 9, 10 times their original fund or the capital that they've called. But like a good solid fund will return somewhere between like 2 to 5x, which results in a like 2 to 5 DPI. So the joke in this is that like this fund manager it made a bunch of investments in crypto when it was like super hot. They're all struggling, can't raise more money, like very few liquidity events where he's able to generate returns for his investors. And so he has a DPI of 0.001, which is effectively 0, right? So that's like rock number 2. And then rock number 3 is which I just think is funny, is unironically trying to date an SF, because SF is like just horrible for, like renownedly horrible for dating. You've got like tons of engineers. You have not a lot of women in the industry, frankly, although that's kind of improving. And it's just like a really challenging dating environment. So I actually don't know that firsthand, but I was talking to a friend of mine the other day in the Bay Area, and he's like, it's so bad. He's like, he flies back to Utah to meet girls and go on dates. Like, he's like, it's that bad in SF. He's like, or if I want to date, I have to basically leave the city and fly somewhere else. So anyways, and then the last one is bad artificial intelligence, dealflow. And I just think this one is kind of funny because right now AI is like all the hotness, right? Like everybody's like investing in AI, super excited about it. But if you're not getting access to good deal flow and AI, it's like you made all these bad investments in crypto and you can't even make up for it with AI today. Like that's just not a great spot to be in. And I think frankly, like in my opinion, and maybe I'll do a video on this in the future of like AI, where the opportunities are. I think investing in AI is like actually pretty challenging for like two big reasons. One, there are a lot of companies that are building like these wrappers around ChatGPT. Don't get me wrong, like ChatGPT and Bard and others are like super cool what they can do. And so you've got these companies that are basically just like building like a cool UX experience on top of those platforms, but they face what's called platform risk, where a larger company that owns the underlying platform, they could change their mind on what they want to do at any time, and you're just screwed because you're so reliant on them as a platform. And that doesn't mean you can't build great, successful businesses by doing that, but you're always at their mercy. Like I had a friend, I was actually on the board of a company that really depended on Facebook as a platform. And Facebook like made some changes to their rules and how they were working with like this particular type of developer or type of product. And the company basically almost went out of business overnight. So that's the challenge of building on someone else's platform, right? You don't know if they're going to build a competing product. They're going to cut off access at any moment. They're going to decide like they don't want to support your type of business, like all kinds of things, right? So that's risky. And then the other risk is, let's say you don't have that platform risk and you're building it yourself. AI is moving so fast that how do you keep an advantage? Like, how do you not get leapfrogged and go from like, hey, we have this really great product to we just are a feature of somebody else's really great product? And I think that's really challenging. So yeah, I don't know. AI is definitely like the new hotness and super cool, and valuations are like insane right now. That probably means now is a better time to be selling than it is to be buying. But the flip side is, I think if you can get into one of these big platform companies, those investors will ultimately do well. But if you're not able to, then you're just stuck with bad AI deal flow, like our poor friend in this meme. Anyways, tell me, what did you think? Do you think this is a funny meme? What do you think of this style of reacting to memes and explaining like why they're funny, why they're interesting? Maybe it's not that interesting to you. I don't know. Tell me what you think in the comments down below. I think they're hilarious. And either way, check out some of my other videos, like how to start a private equity fund with no money. Thanks for joining.